401k contribution rules and a C corporation. Hey everyone, welcome to another episode of AdBits. I'm Adam Bergman, tax attorney and founder of IRA Financial. On today's episode, I'm going to be chatting about rules you need to know if you have a C corporation and want to understand how the solo 401k contribution rules work. So let's get right down to business. What's a C corporation? Well, it's a corporation, it's an entity that has two layers of tax. It has an entity level and a shareholder level. Okay, so corporations, C corporations, are known to have two layers of tax, unlike an S corp or an LLC, which are deemed pass-through entities because there's no entity level tax. Corporations have limited liability protection. It's really the first type of entity that businesses establish to provide themselves with limited liability protection, whether they're GE or IBM. 99% of all public companies are corporations. Corporations can have unlimited amount of shareholders, different classes. There are corporate formalities such as quarterly meetings, board of directors, and the like, but you receive the limited liability protection, which has been entrenched through all 50 states. So corporations are very popular entities for foreigners who don't want to have effectively connected income to the United States, whereas if they invested in a partnership, they would. Unlike an S corp, there are no shareholder restrictions, so foreigners could own stock, corporations can own stock, LLCs can own stock. There's different classes. There could be preferred, common, different types of common, but there are corporate formalities. 2022, the corporate tax rate for corporate earnings is 21%. So if you have a net $100 of corporate earnings, you pay 21% on that. There is no minimum or maximum. In the past, before 2017, there was a different tax rate if you have under $50,000 of net corporate income and a higher rate for above. That is no longer the case. Corporations could adopt solo 401ks, clearly, right? We know any entity can. Corporations file on 11/20, April 15th, or they can get an extension until October 15th. Even if there's no net income, a 11/20 must be filed. There's also a state return that's representative of the 11/20. For solo 401k contributions in 2022, we know there's employee deferrals and profit sharing. On the employee deferral side, we know that the maximum you can do is $20,500 or $27,000 if you're over 50. That is due by 12/31. Why? Because when you are an employee of a corporation, you get a W-2. And unlike a sole proprietorship or single member LLC, you will know what your compensation is by 12/31 because you know what your W-2 is. So the IRS feels comfortable with providing you a deadline of 12/31 for making those employee deferral contributions. Now, the idea is the intent should be there by 12/31. If you write a check December 31, it's not deposited to January 5th, it's going to be okay. But the intent is to make the contributions as of 12/31. The profit sharing, like all forms of entities, whether it's a sole proprietorship, single member LLC, partnership, C corp, S corp, that can be due when the company files its tax return. Why? The company then has the time to figure out exactly what it wants to do and how much available money it has to make those profit sharing contributions. For C corp, it's 25% of the W-2. So if it's one owner of a C corp and the individual makes $100,000, it's 25,000 on the profit sharing. That's the maximum, plus the employee deferral of 20,500 or 27,000 if the individual is over the age of 50. Employee deferrals can be done in pre-tax or Roth, depending on the plan docs, whereas employer profit sharing must be done in pre-tax. That means it is tax deductible to the entity. So again, who's eligible to set up a solo K? Any business, U.S. business that has no full-time employees other than the owners, their spouses. Full-time employees means over 1,000 hours in the year or 3 consecutive years of 500 hours or more. Spouses do not count as employees. So it could be you own 100% of a C corp, you hire a spouse. Your spouse is not deemed an employee, even if he or she receives a W-2 and would not violate the solo 401k eligibility rule. So one thing to remember, employee deferrals are due by 12/31. Employer profit sharing are due by the date the company files its tax return, which is either April 15th or October 15th with extension. So there you go. Hopefully now, if you have a C Corp, you understand all the rules involved in making solo 401k contributions for your business. So hope you guys enjoyed today's podcast. Really appreciate all the support. If you're watching on YouTube, thank you. If you haven't subscribed, don't forget to do that, because it's a great channel. You get 4 videos a week, generally, and a YouTube live, which either drops Wednesday or Thursday, 12 Eastern. That's why you should subscribe, because you'll get notification when I go live. And obviously, you get 3 podcasts: Adam Talks, AdBits, and AdMail, Tuesday, Wednesday, Thursday each week. So lots of great content if you are interested in self-directed retirement topics. So thanks again for spending some time with me today. Have a great day, and take care.